Let's bring in G Squared Private Wealth founding partner and CNBC contributor Victoria Greene and Henry Walsh, asset management president and CIO Kevin Mon. Happy September, guys. Kevin, it's been 5 months since those tariffs were announced. We're back in a moment of uncertainty. A big theme of this presidency is testing the limits of executive power and even executive dexterity, right? The president's both powerful and fast compared to lawmakers and the courts. Should investors just assume that the president's policies are going to stay in place?
Not necessarily. And it appears as though summer is now behind us, but the days of low volatility may be behind us as well. Prior to last week, John, the VIX crashed by 69%, the largest decline in volatility on record. We've had 20 days this year where the market has hit a new high. We had 57 such days last year. We have the S&P 500 trading at a PE now of roughly 25, well above its 5- and 10-year averages. And as you said in your intro, we're heading into what historically has been the most difficult month of the year. Now investors have to process what's happening next with tariffs and trade. The Fed may cut in September. What are they going to do in October and December? That's a lot of uncertainty out there. So I think what investors need to do is stay true to their risk tolerance, stay consistent with their longer-term goals and objectives, and lean into those areas of the market where most of the spending is still taking place. AI infrastructure and aerospace and defense, just to name two.
Victoria Greene, we got a jobs report at the end of this week, and given all of these questions post-earnings about tariffs and whatnot, how much is that going to add to investors' sense of the macro picture?
I think it's going to be the most jobs report watched in a long time. Everybody's going to be wondering what the revisions look like, what's under the hood there, because that's what really spooked the markets last time was the severe revisions down. So I think it's important, probably coming in at 4.3, maybe a little bit of a slight uptick from 4.2. Not too concerned, but everybody is going to be hyper-focused on revisions, trends, and the data integrity and what's happening with the Bureau of Labor, because that area has been under a little bit of pressure. You know, as you talked about some of the executive orders and power being flexed there, that was another area that President Trump has moved faster than most would anticipate, removing that head because of the concerns on data integrity. I think the market still sees this as a good number to watch, very important number to watch, and I think you've got a little bit of concerns. I don't really put a lot of credence in JOLTS. I think JOLTS is a trend line. I don't think JOLTS is a great absolute number. It's better to see it in like a 6 month trend than here it is 7.4 million or 7.5 million, you know, and so I think you got to be a little careful with JOLTS. ADP, the private side, obviously has been a little bit disconnected from the public payroll, so it'll be interesting to see where ADP comes in and if U.S. employment can hold on to 4.2, or if we see unemployment kind of continue to tick up. Regardless of what happens, I think unless it's a massive miss on this, Fed still cuts in September.
Okay, so don't read too much into the job openings and labor turnover survey, JOLTS. Kevin, what do you do as an investor with the hyperscalers, with the big technology stocks? There's been a lot of talk for a long time about how they're so dominant in the major indices, particularly the S&P, and the valuation certainly of those stocks, but then of the S&P is at nosebleed levels right now. Do you think about a rotation, or do you stand pat?
I don't think you want to abandon the hyperscalers in totality, but I think you want to start to nibble around the edges. Look at the other potential benefactors of the AI revolution. Jensen Huang just said last week that he believes total spending on AI infrastructure is going to total somewhere between 3 to 4 trillion by the end of this decade. We're at about 600 billion right now, most of that concentrated with the 4 largest hyperscalers. So who's going to benefit from all that spending? How about companies involved in the construction of data centers like AECOM? How about the companies that supply the cooling, the necessary cooling solutions to those data centers, like a Modine Manufacturing, even a Vertiv or a Comfort System? And then I think about the necessary power solutions away from the utilities, but a company like NewScale. The company was actually the first to receive regulatory approval for their SMR design, small modular reactors that supply power to data centers off-grid. There are other opportunities out there beyond the hyperscalers, but that doesn't mean you abandon those hyperscalers.
Victoria, companies that you like in this environment?
Yeah, I'd be a buyer of tech with any dip here. It's been an almost religious dip buying experience in technology. If you bought it in April, you look really smart. I think if you see NVIDIA continue to come down, into the 150s, I think you're going to have a lot of people stepping in to buy it there. So I don't see this dip, a very long-lived dip. Did anybody mention that September's seasonally weak? I mean, I'm not sure that's been brought up yet. But no, I think technology is still a good hold. I like my industrials. I love financials. Small caps showing some life here. They actually outperformed some of their large cap peers today. You guys were talking regional banks earlier. I think there are definitely some opportunities, but don't abandon the AI trade. Stocks can go down. It does happen. They're not immune to gravity, but this to me looks like a very classic pullback. Yeah, things got a little expensive. Yes, things got a little bit overbought. Now we're hitting weak seasonality. We're about to have this air gap in earnings between now and when Q3 ticks up. And so there's risk. And I think the other sell-off today, just to mention it, is people are a little worried about Salesforce. And they're coming out tomorrow. People worried about Broadcom on the heels of Marvel and NVIDIA. Not that Broadcom won't do well, but the concern is it going to do well enough to push the stock up, which we've seen chip stocks really struggle post-earnings. So I think you've got a little bit of fear here.